Here's a riddle for you. We're in the midst of a deadly pandemic with skyrocketing debt, unemployment, and protest-racked streets. So how does the stock market keep growing and its prognosis stay positive? What's going on here? Is everybody out to lunch? Are the big traders confident that they can somehow exit the markets at just the right time and leave the rest of us holding the bag? I'm Chris Cornish, and you're watching our Midweek Market Watch. Let's talk about an interesting phenomenon called a reserve currency and how it helps shield the US markets during times like these. Almost all countries have their own currencies. The US has the US dollar, the UK has the British pound, and Japan has the yen. So what's a reserve currency? Well, not all currencies are stable. So at any given time, international trade tends to be conducted in only a select few currencies. These hard, reliable currencies are what prices are set in and debt is settled in. And because that currency is used for settling international transactions, it tends to be very in demand. Governments and large institutions then hold large piles of this currency in their reserves, which leads it to being called a reserve currency. Normally, when a government prints new dollars, the value of each dollar tends to go down. But when a government controls a reserve currency, the constant international demand for it keeps its price even when more is printed. What does this mean? Well, it means that the US government is able to print about $100 billion extra per year without suffering a serious penalty for it, thereby making the American economy even stronger than it would otherwise be. And while governments around the world are running the printing presses by the trillions for coronavirus relief, it means that the US dollar won't suffer as much of a penalty as other currencies, which then leads to even more demand for dollars. So as the world's economy hangs in the balance, it's a fair bet that however bad the rest of the world fares, the US is likely to do at least a bit better. The benefit of that extra cushion for American business is one reason why investors seem to be so hopeful about US markets. And while nothing is ever for sure, what's good for the stock market tends to be good for the real estate market too, as saving and retirement accounts get the benefit of rising balances and more spending power. This has been your Midweek Market Watch. If you found this content helpful, check out our weekly report. It's free to subscribe. Just go to the footer of syomortgage.com. I'll catch you again next week.